Hello and welcome to Africa Business Weekly. I'm your host, Akin Obake. Let's dive into this week's top stories and explore what's shaping the future of business in Africa. We start off in South Africa, where it's been a dramatic week in the country as the country's president, Cyril Ramaphosa, met with US President Donald Trump. We'll find out the outcome of the meeting and what market movers are saying about that. Meanwhile, in West Africa, it's been a week of monetary policy decisions. We'll put a spotlight on Nigeria and find out what the decision has on the market. And in East Africa, we'll also touch on discussions on what it means to have an African credit rating agency. Quite a lot to unpack on the show today, but let's cross over to Johannesburg and get updates from my colleague, Karabo.
In a dramatic turn of events during a White House meeting on Wednesday, US President Donald Trump confronted South African President Cyril Ramaphosa with controversial claims of a white genocide in South Africa. Ramaphosa firmly rejected these accusations, emphasizing that crime in South Africa affects all citizens regardless of race and highlighting the presence of white officials in his government. Despite efforts to steer the conversation towards trade and investment, the meeting underscored the ongoing diplomatic tensions between the two nations. For more analysis on the talk outcomes and the way forward for the bilateral relation, CNBC Africa editor Godfrey Mutizwa spoke to Azar Jamin, director and chief economist at Econometrics, as well as political analyst Ongama Ndimka.
I think it was a successful meeting. To be honest, I felt it a very strange event in the first instance to be held. I found it very strange to be dealing with a president of the USA who believes that there is a genocide going on in South Africa when tens of thousands are dying every day in Gaza. But still, from a South African point of view, I think it went off as well as could have been expected. And what was very encouraging is that it was, in a sense, Team South Africa. And I wish we would approach our own issues in a unified manner, far more like what we did yesterday than is normally the case back home.
Lessons learned perhaps, and perhaps we're seeing in part some of that being expressed through the Government of National Unity. Ongama, your take?
Yesterday was a great success. The meeting itself was a great success. Remember, we've come from strained relations, strained and not talking, to presumably still strained but talking. And that's a good thing. That's what South Africa wanted. We've lost an ambassador who got frustrated because Washington was giving him a cold shoulder. So yesterday, for me, the very idea that President Trump and President Ramaphosa were talking just before President Zelensky came here, and that there was follow through from that to have a meeting that reopens diplomatic channels between these two countries. It's amazing to me. Even the critique that's come based on the imperfections of yesterday, for me, I think it's misplaced. I think that President Ramaphosa stuck to what he came there for, and it was not the optics. It was the broader strategic objective of resetting the relations, and I think that was done to near perfection.
So you reckon when we look at this in terms of pushing ahead, a platform has been set that can enable perhaps not a total repair of relations, but enable a working relationship?
What I think is important is that the ground has been set, and presumably even channels of communication among the key working groups have been set. And also the potential for South Africa's estrangement when it came to participation of the US in the G20. It seems to me that it's been dealt with. I think that if we look at the contributions that were made by the business people in the room, the golfers, the leadership of COSATU and the Minister of Agriculture, I think these showed to me that South Africa wasn't going there to try and sugarcoat what's happening. It was authentic that these are some of the problems that we're dealing with, but genocide is not among them. So that was good. And I think that it does pave a way for avenues to be explored around investment promotion, trade, greater trade. But that's going to come with a lot of work because remember, behind the scenes, the groups that have been agitating for White House's stance to be a little hostile towards South Africa are going to continue. Some of these people, in my view, are badly meaning, and facts don't matter to them. What's going to be important is for that relationship to continue to be worked on so that it delivers the beans for us.
Perhaps third time is a charm for South Africa as a Finance Minister Enoch Godongwana tabled the country's third budget for the 2025-2026 fiscal year on Wednesday. Godongwana flagged a wider budget deficit for the country and has tabled a 69.4 billion rand spending cut over the next 3 years. For more, CNBC Africa's Godfrey Mutizwa spoke to Zandile Makhoba, economist and lead specialist for research and insights at Liberty, and Trevor Garvin, head of multi-management at Nedgroup Investments, as well as David Warnaker, tax partner at BDO South Africa.
The corporate tax rate has not increased itself, but the estimate in terms of collection is what has increased. In March, there was an expectation of 331 billion. That now increases to 338. So not a huge increase, but definitely maybe a view that they, with improved compliance, we can start to see better collections on the corporate side, even within a weak economy. It speaks to maybe the benefits that might come out of supporting SARS and ensuring that they have what they need to increase efficiencies there.
Yeah. Got you. All right. What about the credibility of the numbers? You did allude to the fact that you thought there was careful thought that was placed in terms of where the cuts are being announced. But how likely do you think the minister will be able to carry through those numbers politically?
I think because we are in a GNU, it is the first time that we experience this kind of shared governance. There is more pressure to get it right. I think party players will be looking at each other to ensure that, you know, at the end of this fiscal year, they've got a good news story to tell, not only for the greater good of the country, but for political gains as well. I think parties just have that incentive to get things right so that they can count their accolades. And maybe that is what motivates them to finally get things right.
Yeah, campaigning is underway for the 2026 local government elections. There's no doubt about it. I see the Democratic Alliance, the second largest party in the government of national unity, issuing a statement saying it cautiously, that's all in brackets, cautiously supports the new budget. Let me put directly, the Democratic Alliance cautiously welcomes the revenue and expenditure proposals in the Minister of Finance budget speech. We see it as a pathway to a national budget, which we should be able to support when it comes to time to vote, hence the stability. All right, let's bring in Trevor Garvin, the head of multi-management at Nedgroup. Trevor, from a market's perspective, I wanted your take in terms of what this budget contained as a whole.
So it's been interesting. I've been watching the markets over the course of the budget by the Minister of Finance, and really there's been very little change from when he started his budget presentation till we're speaking now. As you can see, I mean, the Rand has actually did most of its movements and work before the budget speech. So I guess in anticipation of what was going to be said. And we've seen over the last week or so, but specifically the last 2 or 3 days, the Rand's strengthened from about 18.20 to the dollar, and it was sitting at 17.88, 89 when he started the budget speech. And as your screen showed a bit earlier, it's actually hardly moved since he's spoken. So I guess that could be read that the markets were expecting roughly what he presented today. There were no real surprises. Equally, that overall the market is positive on the fact that the GNU has got to a consensus that they've passed the budget today, hopefully, and the fiscal framework. And so those are all seen as positives. I think for me, the key thing that stands out is the GDP growth. So the numbers have been dropped, as the minister mentioned, from 1.9% to 1.4%. for 2025, and then increasing to 1.6 and 1.7, I think it was, or 1.8 for 2027. Now, for me, that's one of the most concerning things, is that is just not high enough economic growth for the country to really get on top of its debt issues, and equally in terms of just general economic growth and hitting our unemployment, which, as we know, hit a new all-time high of about 33%, came out about a week ago. So that would be my sort of main concern. And I recognize, I think some of it is affected by global economics. And we know that over the last couple of months, the world's been readjusting to President Trump and his tariffs and ongoing Make America Great Again policies. So that has affected the outlook for global economic growth. And as the minister said today, he's caused a reduction in South Africa's growth.
And those were the major stories driving Southern Africa for this week. It is now back to Akin over in Nigeria.
Thanks there, Karabo. Let's join Tabitha now in Kigali as she gives us updates from East Africa.
Hello again. This week in the East African markets, Tanzania's Dar es Salaam Stock Exchange introduced new trading rules designed to enhance transparency and also improve market efficiency. I spoke to Imani Mohengo, senior manager at CRDB Bank, to break down what this means for investors and the broader financial landscape.
The DSC amended some trading rules, and the primary objective of these amendments was price discovery, to enhance price discovery. It's been an outcry for a while. Some counters were locked, the prices were dormant for some time, and the market has outcried for a while that the trading rules to be changed. And specifically for the block transaction, that has been raised by about 25% from 200 million shillings to 250 million shillings. And the value change itself, we don't expect much impact from the value change itself, but then the impact is expected from the definition of a block trade. See, initially, a block trade had to, at least one party had to be a singular transaction, and the other party can accommodate multiple transactions. But then now the definition of a block trade has been amended to a single lot. That means each party has to have one singular transaction for each party, and that doesn't allow accumulation of multiple orders from retail shareholders or retail investors. So in this case, after the amendment, we expect to see block transactions limited to only institutions or high net worth individuals. So that forces retail investors to go to the main window or the normal window apart from the block transaction window. And that will force price discovery in that window. And that goes along with other amendments, such as the closing price and the price cap and the tick sizes, which have all been amended to accommodate more price discovery in the market.
And yes, Imani, I'd like to know in terms of to what extent you are seeing these new DSE rules change in terms of enhancing transparency and also aligning the exchange with international trading standards.
So as I said initially, that the primary objective of these rules is price discovery. And for instance, I'll give you an example. The price of Vodacom has been the same since around 2019. And in 2021, Vodacom made a loss. In 2021, 2022, the price remained the same. So in terms of market appetite or market interest in the counter, even if the counter made a loss, in terms of shareholders' interest in that loss and the drivers behind that loss, it's different if the price moved downwards, reflecting the losses. Now, if price discovery comes into this counter and now the price reflects business performance, then shareholders would be interested and would enforce transparency from any company. Not saying that Vodacom wasn't transparent in that case, but in the case that shareholders are interested because they see price movement. And that is the primary objective. So we expect to see more transparency. We expect to see more publishing and see the market interested in all publishing and business performance from counters, because we expect that to be reflected in market prices.
Across Africa, there's a growing push for the continent to establish its own credit ratings agency. This move aims to reduce reliance on foreign ratings and also promote the use of local currency capital by addressing foreign exchange risks. CNBC Africa's Abi Agena caught up with Mishak Motize to explore what this could mean for Africa's financial future.
Rating agencies are not just important for African countries. They are important across the globe because they are a key function or a key part of the global financial architecture as a whole. So where they come in is when investors are holding on to money and they are looking for where to invest and considering how much to invest at, they weigh the risk versus the return. And one of the key input into the assessment of risk for investment is a credit rating, because when a credit rating assessment is done, it gives some frame of risk, a sense of risk that investors need to be able to input into their rating models or into their investment models to determine a cost of capital in the form of interest. So that's where the ratings becomes very important. An investor can't make a move before they know the real risk of the instruments that they're investing in. And in Africa, why they have become an issue, because when the global financial architecture was tilting from the traditional framework of donor financing into Africa towards the Eurobond market, all the governments that wanted to tap into the financial market, they needed to have a rating for them to be able to do so. That's why you see there was a spike in the increase of a number of countries that were having a rating around 2002 up to now, where we have about 32 African countries rated.
Looking at this conversation around credit ratings, we've seen most countries are unhappy with how the global rating agencies do categorize them. Perhaps what should be the way forward for African nations going into this new decade where countries are saying we need to have our own rating agencies that are able to profile our issues at home?
Yes, that's very correct, that there's been a concern on the trend of rating across Africa, because generally the rating has been declining over time. When we had 8 countries in Africa rated investment grade, and now we only have that are actually sitting on the fence to be downgraded into the sub-investment grade or junk status. So that's why you see this conversation was ignited at the Assembly of the African Union level to say we need to look into this matter at a very technical level. So our discussion started on how we can both support the African countries together with their corporates to improve their ratings with the big rating agency.
That wraps up our update from the East African region. Back to you again.
Very insightful conversations there. Many thanks, Tabitha. Now, in West Africa, the Central Bank of Nigeria kept its monetary policy rate unchanged at 27.5% following the conclusion of its second Monetary Policy Committee meeting of the year. The CBN Governor, Olayemi Kadoso, gives us more.
The committee was unanimous in its decision to hold policy and thus decided as follows. 1. Retain the MPR at 27.50%. 2. Retain the asymmetric corridor around the MPR at plus 500 to minus 100 basis points. 3. Retain the cash reserve ratio of deposit money banks at 50% and merchant banks at 16%. 4. Retain the liquidity ratio at 30%.
Meanwhile, the move by the Monetary Policy Committee of the Central Bank of Nigeria to build investors' confidence, drive market stability, among others, were key takeaways at Nigeria's MPC announcement. Now, analysts believe more work needs to be done to deliver on aligned fiscal and monetary policies.
You need some time between when policy is announced and when you get the impact and get the results. 2, that they're watching things closely and that the global uncertainty, even though dissipating, is not totally eliminated. 3, that investors are looking for stability and consistency. And that is the driver, that is what is actually pushing this central bank, and they're not going to be swayed by short-term sentiments. I think that's the message. So basically, stability, an attempt to build confidence, and 3, making sure that the difference between the parallel market and the official market is as narrow as possible. That's all.
Right. Nnamdi, your key takeaways, briefly.
One, I'll say things seem to be a bit more positive for them. Talked about positive balance of payments, narrowing gap effect in parallel markets, easing PMS. So things that are beginning to look a bit more positive than they were if you're going to look back maybe 6 months to a year ago. Despite that, still have a few risks and still need some help from the fiscal side with regards to FX earnings. And then finally, they seem to be really, really happy with regards to the net reserves. The fact that it's grown by about 20 billion, I mean, they kept harping on that, basically showing the amount of work that they've done to, sort of grow that number to something more positive and more manageable, which should give a lot more confidence to people. And it's obvious that they are really, really big on transparency.
Right.
Unlike what we had in the past, which they believe will help build investor confidence.
Right. Gregory, let me bring you in here. What are your 3 key takeaways from all that the governor said?
Well, first one, as expected, no change. Governor says they're on the right track. Q4 GDP was good. Let's wait for Q1. Let's also wait to see how broadly based it is. Second comment is there's a reference to measures to boost food supply driven by the federal government. Well, agriculture output figures suggest otherwise, I have to say. And it's not quite clear, there's no formal information, but how poor the insecurity is. Next point is about, I'll make the point about the global environment. So the governor says, yes, it was very bad, it's slightly better. Let's just hope, though, this is, if I may say, that the Nigerian authorities aren't going to parrot some of President Trump's sort of Liberation Day type statements, because you can see as soon as the US government has rowed back from these statements, in part at least, then people's jitters are eased. And those are my 3 comments. I'm going to add a final one, remittances. Have a look, see what Bangladesh and Pakistan have done, because they've been very innovative.
And in other developments, Gavi says it received nearly $255 million from lower-income countries towards their own vaccination program in 2024. Meanwhile, 24 million doses of malaria vaccines have been delivered to 20 African countries, with Mali being the 20th African nation to introduce the malaria vaccine. Ramaphosa, Gavi's managing director of country programs delivery, joined us to unpack this development. Take a listen.
This week we have the World Health Assembly, and I was speaking to a number of ministers, and one minister said, you wash my back while I wash my front. That must be something that is said in Guinea-Bissau. But the bottom line is here, it is easier to help somebody who's helping themselves. And so the ability of governments to do this speaks a volume about the Gavi model, which is really predicated on countries taking increasing responsibility for their health programs. And so we are excited about this, and I think it bodes well, and it gives confidence even to those who continue to give to us, to give with a hope and an end in mind, that these are countries that see their vaccination programs as an investment.
Yes, since the Abidjan Declaration, we've seen countries like Cote d'Ivoire being very vocal now. But how are those countries like Cote d'Ivoire helping to shape the broader African financing agenda here? And also, what lessons can other countries learn from their model?
I think the first thing for Cote d'Ivoire was really the realization that at some point they will have to graduate from the Gavi support, and thinking about a roadmap and how that roadmap should have key milestones. But what Cote d'Ivoire has done, which really is a head above shoulders here, is the fact that it mobilized other countries and said, let us come together and share our experiences in terms of how to prepare for this. For me, that has been leadership unsurpassed, which is really not only focusing on making a difference in their own country, but mobilizing others to commit to the same issues and to the sharing of experiences. Just early this week, we had a meeting that was hosted by the Honorable Minister Pierre Dimba of Cote d'Ivoire, which had about 17 ministers from Africa and also from outside, sharing experiences. And I think it is in this sharing of experiences that we cultivate a space and environment for learning and for strengthening the efforts of transition.
All right, let's get to some of the developments we've seen in with the malaria vaccines here. 24 million doses are delivered to about 20 countries there. I'd like to speak to the progress and what are some of the outliers that are standing out that shows real progress on this front?
I'll keep referring to this week because of the World Health Assembly and the fact that I have all the ministers here in Geneva with me. And one of the things is I just came off a meeting with the minister for Burkina Faso. And I'm telling you that the progress they are making is amazing. 76% of the vaccines that were given have reached children with the first dose. And we see that even the follow-on doses are actually receiving a good turnout in terms of people coming through. But let me go back to an interesting story here, because I also met earlier this week the Minister of Cameroon. I was in Cameroon at the end of 2023, that was in December. And Cameroon was preparing to roll out vaccines in January 2024. And there was some noise, misinformation and challenges in that space.
And this is where we draw the curtains on this week's episode. Thank you for joining us on Africa Business Weekly. You can catch all these stories and more on our website on www.cnbcafrica.com. Until next time, stay informed and stay ahead. I'm Akin Obakeye. Thank you for watching.